Good morning, everyone, and welcome to Ask the Expert, an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses just like yourself. If you have any more questions, ask them in the comments or of the live feed. Intuit QuickBooks has launched a Mindful Tax Kit. Check out the link in the comments for 10 top tips to help you de-stress. I know certainly that I'll be looking forward to looking into that one. If you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook. Accountants and business experts are on hand 24/7. During the live stream, we'll be running a poll, so please do engage, and I'll reveal the results at the end. Okay, so who am I? My name is Aaron Patrick, and I'm a pleasure to be with you again. And I'm a chartered accountant. I'm also a QuickBooks certified trainer with a fancy new logo, so don't be afraid to ask me with any QuickBooks related questions during today's session. I own a state-of-the-art accounting firm called Boffix, which is the best in cloud technology available to help small businesses get the crucial real-time information they need to at their fingertips. If you require accounting advice, payroll, bookkeeping services, and even QuickBooks training, then please do get in touch. We don't want small businesses just to survive even, we want them to thrive. I also have a dedicated QuickBooks YouTube channel called Aaron Patrick, the QuickBooks Chap. So if you need any more QuickBooks news and advice, then why not go over and give the channel a follow. Boffix itself also has a brand new channel called Boffix Taps Tip, which is another great source of video content for small business. Okay, that's enough about me, and let's focus on today's session. As always, this session is all about you and your burning questions. If you have questions, please use any of the social channels to get in touch. So while we wait for the first of the questions to arrive, let's talk about some recent issues which our clients are currently facing. Well, I'm sure you're all aware the tax return deadline is less than a week away. And if you think back to the last tax return deadline to now, so much has changed. This year, we have been seeing at our practice the highest percentage of clients leaving the tax return until the last second. And you can understand why. With the year we've had, knowing a new tax bill is a scary thought for people during this time. If you're listening to this and you've not completed your tax return as yet, then please heed this advice. First of all, do make sure you file your tax return by the 31st of January. I know it's tempting to not file at all, and I know of clients who are burying their head in the sand, but I promise you, missing the deadline will only make things worse. The 31st of January is a deadline for two things. Yes, to make a tax payment, but also it's to submit the tax return itself. Failing to submit the tax return will leave you with a penalty, which nobody wants. Also, it will leave you with a less leverage with HMRC to talk about the options of paying a tax bill if you do have one. HMRC have already said that they're willing to talk to individuals about options and payment plans for the 31st of January, but they won't be able to help you if the return hasn't been submitted. So if you are having issues and you're worried about the tax due, then please submit your return before the deadline and talk to HMRC accordingly. Now, if you're one of the many who already do need to file, how can QuickBooks help you with this? Well, I did a video over on the YouTube channel, Aaron Patrick, the QuickBooks Chap, as I've already said, and I explained how QuickBooks can be used to get a tax return together. I did a video also about how you can put a tax return without using QuickBooks. You know, if this is your first year or you've got some historical data that you need to get for that tax return that's come through. So how can QuickBooks help? Well, remember there's two versions of QuickBooks. There's QuickBooks Self-Employed and there's QuickBooks Online. So if you're with QuickBooks Self-Employed, then all you need to do is make sure all the data is in QuickBooks. Run a few little sense checks, so making sure things like the bank looks realistic, make sure all the transactions have been included, and make sure you've got items in each for every month. And then what you can do then is you can actually file the returns directly from QuickBooks Self-Employed. But then again, if you're on QuickBooks Online, so that's the second version of availability of QuickBooks out there, then you can't file the return from the software quite yet. But what you can do is get a breakdown of which boxes need to be included on your return. To get this position, use the tool at your disposal on QuickBooks Online. Make sure you have all your bank data in, so make sure you're doing all of your sense checks that you would do before. make sure you're using that reconciliation feature within QuickBooks. So making sure that you've gone through and actually reconciled your bank up until at least whatever your year end's going to be, and whatever period that you've got outstanding. And consider income and expenses outside of the bank accounts. So if you are struggling with any of these topics, including putting cash expenses in or reconciling your bank, again, don't forget my YouTube channel. We've got loads of answers to all these questions, and we have videos where we go step by step on each one. When you're happy with your QuickBooks Online data and you're really happy it's complete and you've done those sense checks, at that point then you have the ability to use QuickBooks to help you complete that tax return. So make sure, first of all, that your company in the company settings is set to sole proprietor, and then head over to the tax module on your left-hand side. From there, you'll find a self-assessment section, and this section is brand new. It's only been released in the last 3 months or so you'll be forgiven for not even noticing that it's there. But when you do go into this section, all you'll be asked to do is asked to pick which is the correct tax year. So you're going to either pick the last tax year that needs to be, so that's 1920, that's the one that's due by the 31st of January, or you're going to be asked to pick for the next tax year to give you some estimate of how that's going to be. When you do put the correct tax year though, suddenly you're presented with all the information you need to complete that tax return. So it's going to split it down for you into each and every box that you will need to transfer the data over to your tax return. So at that point, you log into HMRC, go to file your tax return, complete everything outside of the business, so any P60s, P45s, anything like that. And then you'll also have the information from QuickBooks as to complete your self-employed section as well. And that will really help you. And what we have found as well was once you've found that tool and you're able to see that tool working, then going forward, you're going to be able to use that tool to predict what your tax return is going to be going forward. So it's a really useful part to check as well. Now, if this is your first year for doing the tax return, don't forget that SMB community group that we talked about at the beginning of the show. So QuickBooks has a Facebook group full of accountants and experts just like myself. I'm sure you'll be able to find someone to support you for getting that first tax return in as needed. Finally, another reason to think about filing a return by that due date, remember the 31st of January, is due to the uncertainty that we have at the moment. Remember SEIS, so that's the Self-Employed Income Support Scheme? Well, it's been crucial for small businesses at this moment. We don't know any details of any further grants just yet, so we don't know if it's going to extend or what the details is of the fourth grant. But what we do know is that HMRC have been very reliant on tax returns in the future. And what we may find out is that although currently the scheme is based on the 1920 tax return, the 1819 tax return, there may be an opportunity for HMRC to start considering the 1920 tax return as well. And if you haven't filed the return by the deadline, you may be putting future grants at risk. So really do think about this CIS, getting this tax return in on time. It may affect future CIS payments going forward. Speaking of CIS, the third CIS grant is still open for applications. However, there are some strict criteria to bear in mind. Claimants are self-employed individuals of members of partnerships, so basically the same criteria as before for that one, but you must have traded in the 2018-2019 tax year, again, same as before, and submitted your self-assessment tax return on or before April the 23rd, 2020. And that date's really crucial because, again, if they start moving to the next tax return going forward, they may well put that the next grant could have filed a return by the 31st of January 2021. You must also either be currently trading but are impacted by reduced demand on coronavirus, and that's been a really tricky one to make sure that impact has been reduced demand. So you've got to make sure that you can at least find a way to be able to prove that you've been adversely affected and have been trading but are temporarily unable to do so due to coronavirus. You must also declare that you intend to continue to trade and you reasonably believe that there have been significant reduction to your trading profits. So you've got to be able to demonstrate the fact that to HMRC that you have been adversely affected. And that sometimes it's quite a tricky one to be able to make sure that you've got available and ready to go. The CIS third grant applications do close soon, so be aware, and those intending to claim should do so as soon as possible. You should make sure you claim from the date HMRC has given you, either by email, letter, or within the service. So that's the online portal. And if you're eligible, you must make your claim for the third grant on or before January the 29th of 29th of January 2021. So we've only got a couple of days left. So in a nutshell, make sure that if you are looking to get that third grant, that you've got that claim in before now, which is only a few days away, and that's a lot to take in. So in summary, what have we talked about today? First of all, please, please, please heed the advice. Don't miss that deadline for filing your 31st of January tax return. Make sure you have a look on your online portal, so your personal online portal from HMRC, and just make sure that you have filed that return for the correct year. So do yourself a favor, have a look in, log in yourself, and just make sure and give yourself that peace of mind. When you've got that filed, that's going to give you leverage if you are needing to talk to HMRC about any options in terms of paying any taxes that may be due. So make sure you get filed, don't bury your head in sand, and I promise you'll be in a better position. And if eligible, don't miss that deadline for CEIS on the 29th of January, so only a couple of days before. So we've literally got a week for the 31st of January, and we've only got 5 or so days until that 29th. So please do make sure that you don't miss either of those two deadlines if you're eligible. And don't forget, QuickBooks Online can always help you in terms of getting that file, that tax return. And also it's a great resource as well for showing any proof you may need that you need to claim for that SEIS. Nothing tells HMRC better than that you're struggling with your, due to coronavirus, than a reduction from 1 year to the next. So that could be a really useful tool as well. Either way, QuickBooks Online should be the perfect tool for you to get through those two deadlines. As always, keep watching each day on Ask the Expert, as we'll be keeping you up to date with any further changes or aid available. Now let's talk about and have a look about your wonderful questions. Remember, if you'd like your question answered live on air, then feel free to ask any question in the comments or use the hashtag QBATE on Twitter. So let's go and have a look at that first question that's come through then. So Laurie from Facebook Live asks, "Hi Aaron, I went self-employed in August 2020. Do I need to file a self-assessment this 31st of January or next? Thank you." That's a great question there, and it's one that a lot of people do get confused with. Now, I'll explain the dates in a moment, but the first thing to remember is your Bible, and the best way for you to know if you need to do a tax return or not is to log into HMRC's online portal. Each one of us has an opportunity to log in personally, and when we log in personally, it's going to give us a whole raft of information, from past employment information to any tax code changes. And crucially for you, it's also going to say if you have a tax return and if that's due, or if it's been paid, or if it's been filed already. So what I would say from your point of view is if you have the ability to get yourself logged in. Now, the one problem about that, a bit of advice at this late stage, is that actually it's going to take you a couple of days to get that yourself logged in. The way that HMRC get you into that portal is you go and sign in. So just go to www.gov.uk, go to sign into HMRC services. When you go to sign in, and they ask you for your information for the first time, so your UTR number and your national insurance number and your postcode. Once you've provided that information, they're going to ask you to activate the service. And activating the service means they send you a physical letter with an activation code on it. Now, that activation code can take anywhere between 5 and 7 days. So during this time, we may find that that's not going to be able to get you that information as soon as possible. The good news for you, though, Laurie, is that actually with you having went self-employed by August 2020, then that means you're in the 2020 to 2021 tax year. So when we talk about tax year, they always finish on the 5th of April. And what you've got to think about is, when is your next 5th of April? So if you started August 2020, then your next 5th of April is April 2021. Therefore, your first tax period, if you like, the first tax return you're going to have to complete will be the 2020 to 2021. And good news is the tax return that is due by the 31st of January is going to be for the 1920 the 2019 to 2020 tax return. So we're looking at making sure that everything's been prepared for the previous year, not this current year. So that's good news for you, that you don't have a tax return due by the 31st of January, but that's only based on your self-employed. So you may have other things happening, there may be other reasons. So I always do urge people that the first thing that they look at, or the first place that they use as an opportunity to know if they need a tax return completed or not, is that they go and head over to that self-assessment login page from HMRC, and they go tell you from there. It's a perfect place for you to be able to see any returns that are due, what the dates are, when they're going to be available, and everything like that. So do get in a good habit of getting yourself logged into there. You'll find it makes your life so much easier going forward. We've got another one from Facebook Messenger. So Sigmund says, "Hi Aaron, I'm doing my accounting for my new business." Congratulations there. "I want to ask if there's any way to track inventory using single entry bookkeeping method." Great question there. So what we're saying here is the fact that how do you record inventory when you're starting a brand new business? Now, using single entry bookkeeping method is quite an old school way of looking at it, but it is certainly, there is an opportunity for you to be able to at least record inventory from there. It's all going to be about where you're going to basically effectively post your transactions to. Now, personally, from my experience, and something I would definitely look into, if this is your first time looking at a new business, then using a single entry bookkeeping method might not be the best possible way of being able to keep on top of everything. What I'd highly recommend is you look into a solution like QuickBooks and making sure that you have the ability to use all of the technology available to make your life easier. See, the reason I would suggest something like QuickBooks is the fact that there is actually an inventory or a stock management solution built directly in the product. And then all you need to worry about is making sure that you're interacting with that stock as you're going along. So that's going to make your life so much easier. Instead of having to rely on double entry, or in your case, single entry bookkeeping, and be able to keep those records manually updated, you're going to have the opportunity to use a piece of software that's going to be intuitive and going to make it so it's really easy for you to be able to put that information in. So I really highly recommend you looking into getting QuickBooks. They offer you free trials at the beginning, so you have the opportunity to try before you buy and everything else. But yeah, if you do go in there, make sure you get the Plus version, because that's the one that's going to give you the opportunity to have inventory tracking, and then you're going to be able to track inventory really quickly. Okay, wonderful. We've got Kirsty from YouTube Live asking, "I've been told you need to do a self-assessment after you have earned over £1,000. Is that true?" And that's a great question there by Kirsty. So this is one of the ones where we get asked quite a lot of, what's my requirement to do a tax return, especially when we're coming up to a tax return deadline like we are at the moment. Remember, we've only got until the 31st of January, so you've only got till Sunday to get that tax return in. Then if you're going to go that, or if you have a requirement, or trying to think about what that requirement's going to be, then that £1,000 is something that gets thrown around quite a lot. And this is one of the confusions a lot of people have when they first start businesses. There's all these numbers thrown around. There's the £12,000 odd for your personal allowance. There's the £1,000 limit that also gets told around. And there's a lot of requirements or a lot of numbers being thrown around about, do I need to do a tax return or not? One of the things I'd always recommend you do is tell HMRC the second that you've got some form of income that's outside of your normal day-to-day payroll. So as soon as you start a new business or started to rent, or whatever the criteria is, when you're earning income or you're actively going out there to earn some money, and if you don't have any taxes being taken on it from source, so if you are doing a business or anything like that, I highly recommend you tell HMRC about that. What they'll do is they will then ask you to fill out a tax return each and every year. And that £1,000 that gets talked about is all about £1,000 of turnover. So what will basically happen is, if your turnover is below £1,000 at the end of a tax year, then at that point you won't have a requirement to actually put it on the return. But you'll still have a requirement to complete a return. It's just that you'll be thinking about, or you'll have that ability to wonder about if you do need to include it or don't need to include it. And you're in a much better position to be going in and trying and having to complete a tax return, and either decide you need to include that income or include that bit of business income, or you don't need to include it, then being in a position where you decide you should have included it and then realize you've missed a deadline and you haven't filed your tax return on time. Because if you go around that route, you're going to give yourself penalties, issues, and everything else. So I highly, highly recommend that any form of income you've got outside of your normal P60 or your normal employed income, do tell HMRC. They'll then give you a chance to do a tax return. And then when you're doing a tax return, you can then use those criteria, use those tests to see if you need to include that additional income or not. And that way you're going to give yourself the best possible chance of making sure you don't miss any penalties or miss any deadlines. And you're going to feel better in terms of knowing that everything's compliant. And if that income is below £1,000, then at that point you don't have a requirement to put it in there. We've got another question here from Celeb from Twitter DM. Good morning. Can I claim expenses deductions from being registered as self-employed? I applied for self-assessment in September, but I became self-employed earlier in July. So when it comes to claiming expenses and deductions from being registered as self-employed, there's a whole raft of costs and expenses that you can claim. The golden rule is if you need that expense to be able to make a sale, then you're allowed, but the majority of the time you're allowed to claim for it. Now, as being self-employed, you may have to put a private proportion element to it. So things like motor vehicle costs and telephone costs and mobile home broadband, things like that. You may need to consider what's the private proportion and the business proportion and only claim for the business portion. But the golden rule is if you can relate an expense to your income, then you're going to have an opportunity to make a claim for that expense. So basically go through your bank statement, have a look at all the costs you've incurred. And if there's a reason that you would have been able to use that expense against some form of income that you've made during that year, then that is your chance to be able to have a look at claiming it. One of the things I always tell people to do as well is open up your tax return, have a look at the boxes they're asking you to fill out. That's always quite a nice little checklist, if you like, of going through the type of expenses that are generally claimed for. And you can use that as a really quick way of going through and seeing if you've got anything that relates to those particular boxes. So they'll ask you things like repairs and renewals and computer expenses and admin expenses and items like that. And that just gives you an opportunity to go through and do it from there. We've got Shawat from Facebook Live asks, hey, I was operating for 2 months last year from September to November, and I stopped operating and I don't intend to start up again. Do I need to fill out the self-assessment? That's a great question there. And it is one of those ones where it can always depend on that £1,000 threshold and everything else. Now, the fact that you did start means that really you should have told HMRC that you were starting and that you were looking to complete a tax return, or at least that you had income outside of your P60. With that in mind, HMRC may have a requirement for you to complete a tax return. And if they are asking for you to complete one, even if your other income doesn't qualify anymore, you still have to make sure that tax return is completed. Now, this could be what we class as a nil tax return. So it could be that there's no income on there whatsoever. But remember, a tax return isn't just your income from any self-employed or any business income. It's your total taxable earnings in a particular period. So if you had a P60 and you had some employed income out elsewhere, or if you had some rental income or any other form of income, then what you need to be doing is considering that and thinking about that income, and you're going to have to put that on your tax return. Again, as I said before, the golden rule here, I would always say, is get yourself signed in to your personal HMRC portal. From there, you're going to see if HMRC is expecting a tax return or not by the 31st of January. So get yourself logged in, have a look and see if they're asking for one. If they are asking for one, then you definitely need to get one in by the 31st of January. Even if it's a nil return, you need to make sure you get that one filed in by the 31st of January. So have a look, see if they're asking for one. And if they're not asking one, then what you've got to think about is, do you think about that £1,000 turnover? If you've gone over that £1,000 turnover, then definitely need to include or get a tax return filed in on time. So good luck with that one. Hopefully that goes well for you. Chana from Facebook Live asks, hi, I've never filled the tax return myself. My accountant did it for me. How do I start doing it myself? And that's a great question. That's something that here on my channel, at least, I talk about quite a lot in terms of, well, how can you get away with filing your own tax return? Because one of the things that, and other accountants are going to hate me for saying this, but it is true, is there is no actual legal requirement for going out there and having an accountant do your tax return for you. The whole benefit of using an accountant is having that peace of mind that everything's correct and everything's been done for you, and also saving time in terms of having to put the administration time in. And most accountants as well can also give you really good advice in terms of making sure that you're making the most out of what can be claimed, when, and everything else, and hopefully give you advice to making sure you're paying that correct tax figure. Now, one thing that you don't need, though, is an accountant from the first place, as I've already said. So if you are looking to do it yourself, one thing I would look at using is a piece of software. Now, the reason the software is so useful is because one of the main issues about creating a tax return in the first place is making sure you've got all that information in. So what I would recommend you do at that point is I would recommend that you use a piece of software, get comfortable with that software, and do what's called a reconciliation process. When you have a reconciled piece of software, that means that all the data has been put in there. So things like QuickBooks will be looking around and making sure that your bank account and everything else has been put on correctly. So what will happen is that you've got all that data flowing through lovely from your bank, and it's going to all the right categories, and it's basically painting a picture of how your business is doing. At that point then, with a nice reconciled information, what you can do then is you can think about then looking at putting all that information from QuickBooks onto your tax return. Because as I said in the intro, QuickBooks has a really great way of being able to break down what's needed on a tax return and where to put those information to the right relevant boxes. To do yourself some favor, look at some software and use software as an opportunity to be able to aid you in completing a tax return. I promise you it's by far the most effective way if you aren't using an accountant going forward. I've got one more question that I'm going to quickly answer on, and then we are going to wrap up. So Lynn Marari from Facebook Live asks, I forgot my gateway password. What should I do? Really straightforward, really quick, this one. Go and get yourself logged into HMRC, or go to log yourself into HMRC. You'll be asked at that point, what do I do if I've forgotten my password or if I've forgotten my user ID? For both of those answers, it's going to take you to the relevant page and give you the opportunity to be able to get one back. And when it comes to password, you normally get an opportunity to be able to request the password there and then, and they'll ask for some of your security information. So maybe your telephone number, something like that. And then once you provide that information, they should be able to give you that password straight away, get you instant access. Worst case scenario, though, they have to send you a new activation code through the post. So just have a look and see if you can get yourself logged in. But basically, go to the login page and everything can be sorted from there. All right then, well, that is it. And again, we've gone through another half an hour of Ask the Expert. So thank you for tuning in this morning. And if you do want to get in contact with me, then do make sure you use hello@Boffix. During this whole Ask the Expert, we were running a poll, and we've got those poll results in, and they're quite interesting. So the poll results we were asking for were, are you optimistic about your business growth in 2021? And surprisingly and gratefully, 63% of you said yes. So that's a great percentage there, but 37% of you said no. Now, I can completely relate to that 37%. I assume, without painting a broad brush here, that most of that is down to the uncertainty around COVID and everything that goes with it. But it is reassuring to see at least 63% of you out there are optimistic about your business growth. And that's what we need to be. We need to be optimistic. That is our best way of getting through any of this going forward, is to keep that optimism as high as possible. For those of you, 37%, then keep signing in and keep watching Ask the Expert. I promise you, this is a place where we are looking to make sure that you get the best advice possible to give you the opportunity to make sure that your businesses can grow. So please, please, please have a look at putting that through from there. So as I said, thank you for tuning in this morning. If you want to get in contact with me, then please send a message to hello@boffix.com. Coming up on Ask the Expert tomorrow is founder and creative director of Self Space, Jody Carlos, and Self Space offers an opportunity for a good conversation with a qualified person. I am definitely looking forward for this speaker tomorrow. If you've seen any of the content that's been put out there by QuickBooks at the moment, you'll notice there's already a load of information around that. So I really am going to be tuning in tomorrow to learn how to manage your everyday mental maintenance. And let's be honest, during this time, that couldn't be a better time to be offering that solution. So don't forget to join the official Intuit QuickBooks SMB group on Facebook and also Mindful Tax Tips. You can find the link in the comments below. And if you do join the SMB group on Facebook, then experts like myself are on hand 24/7 to help you go along. So with that then, it's just for me to say goodbye. Thank you very much for attending today. Thank you for all your lovely questions. And I'm sure I'll see you in the next video. Bye for now.